6 things you ought to know about health family savings plans. Health savings accounts, HSAs, are widely well known. Since their introduction in 2004, around 2.5 million Americans have signed up for these so-called consumer-driven health insurance. But, alas, HSA plans aren't for all. Below are a few pointers that will help you consider whether an HSA will help you and also your own family. 1. An HSA plan can cut healthcare costs by a mean of 40% for many people. Still, a number of people is not going to understand any net savings. These most likely to recognize considerable savings are individuals who pay all their own health insurance premiums, including the self-employed, who are relatively healthy with few health-related expenses. 2. Health savings plan restores liberty of choice. An HSA strategy places individual customers in charge of their own wellness care. This also indicates that every person must be more responsible for their very own healthcare choices. This strategy of self-reliance isn't necessarily popular with or proper for everyone, especially those who have become more comfortable with HMO-type copay plans. 3. You must be insurable to be able to qualify for the HSA Qualified Health Insurance Plan. Usually, it is relatively trouble-free to meet the requirements, that is, no health-related examinations, etc. Most insurance companies offering HSA coverage will concern based on your application answers, may be accompanied by means of a follow-up phone interview. In some cases, health records may be required, and firms consistently reserve the right to order a prearranged exam. Because most people do not have a correctly qualified high-deductible insurance policy, they'll need to change insurance plans in order to become HSA eligible. Unless coverage will be provided under little group reform regulations, typically teams with 2 to 49 employees, the newest high-deductible plan will undoubtedly be individually underwritten by an insurance carrier. What this means is that some pre-existing conditions may not be entirely insured. Instead, some companies may choose to protect specific pre-existing conditions in exchange for slightly higher premiums. Sadly, some health conditions simply render an individual uninsurable, examples, diabetes, Crohn's disease, heart attack, etc. Underwriting conditions vary by express, which is another reason to count on a skilled wellness plan broker. You must not change to a HSA plan when the management of existing medical expenses is more significant than saving upfront healthcare insurance premiums. Do not change health insurance in the midst of continuing medical treatments, after an important health problem has been diagnosed, or whether any family member is pregnant. 4. Health savings accounts reduce income taxes. Every money put into your HSA accounts is deducted from your taxable earnings in exactly the same manner as benefits into a traditional IRA accounts, regardless of whether you spend it or only save it. Unlike an IRA, withdrawals are tax-free when used to pay qualifying health-related expenses. In many scenarios, fresh account holders have the ability to nearly completely fund their HSA with cash saved on premiums from a prior, higher-price strategy. By stashing all or most of these savings into an HSA, the account holder understands immediate, added savings in the type of reduced taxes. 5. Even though HSA insurance premiums are low, they are perhaps not always only you might anticipate. This happens for one chief reason. Simply stated, the fundamental insurance plan is simply thought a health plan. Even though it has a large deductible, as required by law, the insurance carrier still must pay for the risk it really is presuming on the deductible amount, which it does by charging premiums. Several companies provide policies with one deductible that family members give toward. Lower premiums represent only one component of the low internet cost attained with an HSA plan. The low internet cost of an HSA plan is attained after factoring in the benefits of lower taxes, made possible by the tax-deductible contribution to the HSA accounts. Therefore, if obtaining the cheapest possible gross premium is the priority, You may want to contemplate a high-deductible, non-HSA policy, especially if you really do not find the advantage to contributing to a tax-deductible checking account. 6. An HSA provides your best chance to help keep a cover on health insurance rate increases. Make no mistake, you will have rate increases along with your HSA insurance plan. Because an HSA qualified policy is still a health plan in mind, there is no legitimate reason to presuppose that an HSA policy would be protected to rate increases demanded by an insurance company to keep paying claims and stay in company. However, what you can anticipate is that the actual money amount of any future fee increases will likely be appreciably lower compared to traditional health insurance coverage, standard PPO and HMO plans. That is valid because insurance companies base growths on percentages, and also the exact same percentage of a reduced base premium results in a lower dollar increase. It's not a perfect solution, but it is the most cost-efficient option for a lot of qualified individuals. Click here to visit quotesagent2u.com.